We will check the markets. We're not at the highs of the session, but nonetheless, we obviously have pretty big gains across the board. This was always the risk, wasn't it? That just like Liberation Day, you get all bearish and you have a president whose most critical scorecard is right up there on the board here at the New York Stock Exchange that shows the major averages in the stock market. And a headline like the one we got this morning and the comments that we got from him directly this morning have caused quite a rally.
Well, last year, Scott, the Trump put, if you would, was in the bond market. The Trump put probably was in the oil market in 2026. And I think that's ultimately what we're witnessing right now. We still do not have enough information in an environment where you properly describe it as being binary to make a determination if ultimately this is the moment where we just significantly move higher from here. I do think today is a very important day from two aspects. Number one, first of all, the systematic trend-following funds utilize 3 closes below the 200-day moving average. Today would be the third day closing below that critical 200-day moving average at 66.25. Do with that information what you wish. It doesn't mean you're going to see significant selling on the close. It just means the overall bias will flip the same way it did last spring, which was the wrong move, and the same way that it did in April of 2022, which was the right move, because following that, you had 149 days below it and 20% down. The other element to all this that I think is important, I take the other side of it. In the last several days, you've seen a significant rise in yields, and you have seen equities that are correlated to that rise in yields. I think this is a tremendous opportunity. If you're looking for value from rising yields, I think yields are going to push lower. I think the notion of a rate hike is absolutely misguided.
I mean, it may be misguided. Obviously, the market.
I actually think you're going to get a rate cut.
The market says that there's a higher percentage of getting a rate hike in June before you get a rate hike.
That's the dislocation. I take the other side of it.
Okay.
I take the other side, and there's things you can do in the market for equities related to it.
Okay, so I just want to give you a headline here because there's been so many things that are happening, and it's a stock market that has come off of its highs, and we should just give you the latest headlines here. That was a post on X first. Iran's parliament speaker says no talks have been held with the United States. The speaker says, quote, fake news used to manipulate oil markets. Goes on to say that the Iranian people demand complete and remorseful punishment of the aggressors. So that is allegedly coming from Iran's parliamentary speaker from a post on social media that has undoubtedly had a little bit of an impact, Steph, on this market. Talks that our president said took place, strong talks, he said, almost all points of agreement. Witkoff and Kushner, the ones who had them, they took place yesterday. They want very much to make a deal of the Iranians. We'd like to make a deal, too, going to get together again today. So you take it for whatever it's worth. I'll just go back to where many people are sort of putting their signposts today. That is a rehash of Liberation Day and the aftermath of, a president who just doesn't want to see the stock market go down a ton.
Which is not a bad thing, right? I don't believe anything Iran has to say, so I discount that. I actually think that the Trump administration has been very consistent with saying to us, this will be short-lived. Is it 4 or 5 weeks, 5, 6 weeks, but not months, not years. And so if that's the case, in addition to heading into the midterm elections, I think it is going to be less than expected in terms of the time frame. He can't afford to have oil prices and just the cost of living this high and this bad for so many people, especially in a K-shaped economy. The high end can handle this. The mid and lower ends, they just can't. But there's still a lot of unknowns in general, Scott. So it feels good today. It will come down to the timing. But then I always come back and I bore you to tears with the economic data because it's important. Because I think we are actually in a better position from an economic standpoint this go round than where we were Liberation Day, where we were 2 years ago, Silicon Valley Bank collapse, where we were COVID. And all three of those instances, we saw massive recoveries, and you had to actually be buying in the uncertainty in general, right? If you wait for the uncertainty to get certain, you're going to miss so much, and you have to think longer term. So traders, totally a different animal. But from an investment point of view, you have to look for big blue chip quality companies that get thrown out with everything else, and you know that's what I've been doing. I have been buying a lot, and I don't even have a lot of cash. We are way oversold. I would not be surprised to see a couple of days of nice euphoria here, but we're probably going to ebb and flow until we get that timeline. But by then, stocks are going to be higher, in my opinion.
Is this post-Liberation Day buy stocks part deux?
I think it is. I think it is. I mean, we're never going to know, as Stephanie just said, until it's well after the fact. But I think the president did just tip his hand. Remember, on Saturday, he said if the Strait of Hormuz is not open in 48 hours, I'm going to bomb power plants. Now, let's be clear. I think there's another 3 to 4 hours before that timeline is up. And darkness is falling over Iran, which is presumably when bombs would start falling. However, we have to give a lot of credence to the fact that he not only hasn't bombed so far, but he put out this tweet saying that things are good. And what it says to me is that just like on April 9th of last year when he was paying attention to the bond market, Joe, as you pointed out, now he is paying attention to the oil market, and he realizes we're reaching a point of pain past which he cannot expect to have his policies continue to enact it, and that he would probably get blown out in the midterm election. So he is veering course. Now, let's be clear. The Iranians have a say in this. They're not exactly opening the gates to the Strait of Hormuz right now, but that's not dissimilar to last year with the tariffs when he was saying that there are all these deals, and a lot of countries were saying, what are you talking about? So this will play out over time, but he has clearly tipped his hand that he's not going to allow oil to stay at $100 plus per barrel.
You've seen enough that you bought eBay today. You can tell us why you picked that one specifically, but from what I understand, you told our production team it's very much in the spirit of feeling like this is like that was.
It is. I mean, there's an old expression. We've used it many times on the show. History doesn't repeat itself, but it does rhyme. I think that's where we are now. With regards to eBay, this strikes me as a good way to play the discretionary sector for a few reasons. One, the discretionary sector, as oil prices and gasoline prices eventually come down, should see a pickup. But this also appeals to both legs of the K side. There are luxury goods being sold on eBay, but there are also all sorts of refurbished and secondhand goods being sold on eBay. And there's one little lever of this story that is not really talked about too much. This is where collectibles are traded quite often. That's actually a major growth channel. Company trades very cheaply, low teens on a forward multiple of earnings, very little debt, good free cash flow. They really shrink their share count a lot. You know, Scott, I like that. It's a growing company. This is a good place to buy it.
All right, Bryn. So it's your turn. I mean, you know, just playing off Jim, discretionary's up a lot. Airlines, cruises, all the things that got beaten down so badly over the last, 3.5 to 4 weeks are rallying on this news today. So you want to put it all into your own words on how you see this? We'll take everything at this point at face value because the market's moving on what the president had to say. Despite, we're still waiting for some more specifics, but nonetheless, the market's reacting, so we'll react to that.
I think that we'll see what happens by Friday. To kind of build on what Joe was saying on the 200-day, we can handle being under the 200-day for probably 10 days. If you look historically, we need to get above that with the NASDAQ and the S&P to really be able to regain the bull market. And so I think investors need to look at that 66.24 level to see we're under it right now, but we need to get back over it. I think yields also 450. We were making lower highs, and 450 is like the next leg lower on those highs. As long as we're staying below that, I think that also dovetails with the 200-day. We're in good shape. And so I think investors look at the 10-year at 450. You do not want to go above. We want to get above the 200-day. And then going back to oil, I think that definitely everyone's right about oil being an important signal. But understand this is where costs globally are going to start permeating through if we stay in the 80s and 90s for foreseeable future, because 95% of all manufactured goods, a critical component of that is hydrocarbons or petrochemicals. And so whether it's plastic, whether it's synthetic fibers, et cetera, And so that's where you're going to see, I think, prices are going to go higher with planes. Prices are going to go higher with really anything manufactured, as long as oil even remotely is above 80. And so I don't think we're out of the woods yet. I definitely think there's similarities to Liberation Day, with the exception of that was a manufactured thing by the White House. They had the ability to end it at any time. I still go back to this is existential for the Iranian regime. And so we'll see if level heads, if they even have level heads, can prevail, and the Japanese and our other partners. But I mean, I just think that we're going to have to wait till the end of the week. And I don't think we're really out of the woods, because this is not Liberation Day. This is much more impactful, much more serious.
Yeah, but the de-escalation of rhetoric, at least for the time being, seems to be good enough for, as Stephanie, I think, rightly pointed out, and a pretty oversold or getting to that point market and looking for anything positive to hang its hat on. And it got it this morning, and it's reacting in kind.